The session open. Today is February 27th and it's 9:39 a.m. in London when we're doing this market update. We're going to take a look at the markets. If you do have any questions, you can just put them here in the chat box. There's still a lot of focus on the coronavirus. That's really what's driving things. So we're going to talk about that. And as well, yesterday we had the leader of the ECB talking as well. Didn't say nothing about any monetary stimulus or anything like that for the economy due to the shutdown in Italy. So it looks like everybody's sort of moving a bit slowly in regards to the virus. As for the percentage growth change yesterday for the virus, I think we landed on 41% or something like that. I was keeping track of that yesterday. So the way the numbers are updated in Italy is a bit. They did. At least yesterday, they would change things very late in the day. So around 6 p.m. Italian time, they only reported 378 cases, which was just 70% higher from 322 the last night. But then effectively, sort of 15 minutes later, they actually pushed another update. So suddenly it was 400, and then about an hour or so after that, they published the cases. So there were 455 cases. So that's actually that's a very aggressive growth. It's 41% higher from 322 the day before. So in the case of the numbers, we need to sort of probably wait until the end of the day to see. And obviously a 41% growth, that is high. On average in China, when things were going aggressively higher, you saw a growth rate of about 35%. Sometimes, of course, you had these crazy moves like 60% or so, and that, but then after eventually went below 35. I think it went 20, and we were around 35, and then effectively the day afterwards it was like maybe 20 or something like that, and then from there it sort of stayed around 20, and then it went down less and less, and now I think it's negative in China. So we still haven't reached that here in Italy. And I think South Korea as well is doing quite badly. But I think the number one reason why people worry so much is because, again, Italy, for all my people that not from Europe, most of you guys are from Europe, so but Italy is really just around the corner. Here is Italy. So the problems is in this area here. And you have France, you got Switzerland, you got Austria, and you got Barcelona. It's not that difficult. For example, you just grab a car, go to Barcelona, go to Marseille, and London is just up here. And I think that is really what people are thinking. Like, what if it goes to France or Germany? And Germany is the biggest economy of Europe, and then you got France. So these two are the big economies. And if people need to take 2-week or 4-week break, as is happening in China now, then it's probably not going to go too good. Let me show you about China, by the way. See if I can find it. So this is a gentleman that works for the Financial Times, and we're starting to see some growth, some pickup in the Chinese economy. It's because it's difficult to see exactly what's happening over there. People looking at different data points. So this is the average daily coal consumption for power generation. So this is your sort of average. So this is the Chinese New Year. So because of the Chinese New Year, they take time off. So that's here, and then it tends to be a slow build up following the Chinese New Year. And you can see that this time around, it's still very quiet, some 30 days after the Chinese New Year, but things are starting to pick up a bit. Something here which is quite interesting and innovative is the congestion index. I think this is for, let me see this little, for the 5 biggest cities, and they have a congestion index. So you can see here around Chinese New Year, very, very quiet, and then things pick up again. Now here we can see the first few signs that things are actually starting to pick up. And you can't really see it, so let me see if I can do this differently. But this is purchased floor space, so you can see, and this is for the 30 biggest cities, so you can see here that things are picking up again. but we're not at the typical levels. So we have seen growth in the past. These are just some numbers. People look at other stuff like electricity consumption and stuff like that, but this is the one I found online. It's not very easy to find everything, but yeah, I think TomTom. Some people look at TomTom data, and there are a few things for the congestion, and there's a few other things here to see how things are going. So things are picking up, and what people think that we will have a V-shaped bounce back, which would make sense. People would go back and buy and do whatever they wanted to do. The only challenge is that there was a report, and some 70%, I think it was just 80% of small businesses, they said if they need to withstand this pressure for 6 months, then very few of them are going to be able to cope with that. A shutdown now of a month or so, people can cope with that, but when it starts to become 3 months and so on, then they need a bit of help. So people talking potentially giving tax breaks to companies and cash infusions to help them overcome the problems. We'll see about that. As for central bank measures, I think it was the Korean central bank. They decided not to cut interest rates. I think they had the meeting last night. So from the central bank side of things, they're not really doing anything about this right now. So how is this influencing? This trade idea primarily relates to something like the German DAX. So in the case of the German DAX, as you know, we did trade below these levels here, which was the 12,878 level. So we did trade below these levels, and the market trade lower. We said if we take out this level, we'll probably go down a bit. And this is your 200-day moving average. The 200-day moving average is an interesting level where the market bounced in the past. And I can also put other analysis here to give me an indication that this could potentially be an interesting level for long-term traders. However, in the short term, we're still in a downtrend, as you can see. As long as trade below 12,866, this will be a downtrend, and we're going upwards. We might go up a little bit higher, maybe 12,700, but then we're probably going to go down again here. So if you just want to follow the short-term trend, and you also think that the situation with the coronavirus will continue, which looks likely, especially with the high growth rate we saw from Italy, then I will be bearish below 12,866. Now, if you are looking at the longer term view and you sort of reckon that, all right, right now everybody's scared of the coronavirus, and you think that eventually things will bounce back, and there are people that do think they're going to bounce back, especially as it gets a bit warmer, then this is an interesting level because we are around the 200-day moving average. The alternative would be to wait for it to trade a little bit lower to maybe 11,832. I think from these levels, will be a slide of 14%. I think from these, I don't think we're going to trade below the August low. I think that would be too much almost, because it's not like a normal recession. It would be just demand just going away. Of course, if you have debts and stuff like that, it can become an issue. You need to pay the debts even if you're not working. And obviously, if it goes for a long time, then it becomes a problem. But as I said before, it's likely that the governments will do something to support. Now, this is your S&P 500, and the S&P 500 is almost back at the breakup point. So you remember when we're trading here, I said we can probably go much higher. And the market eventually rallied with some 12%. And the reason for this, because you have a massive inverse head and shoulders. You have a head, left, and a right shoulder. Now, I do know people say, well, it's a bottoming out pattern. Well, I traded this pattern many times and made money on it, so I don't really care where I see the pattern. The break happened here, we're going upwards, and I still think we haven't actually touched that target yet. We did go up, but we didn't go all the way up. So we still have more to go here. So we're effectively revisiting the breakup point. That's what we're doing here. Now, if you look at this from big picture perspective as well, we are close to, or we did also actually touch the 200-day moving average this morning, more or less. And this is the breakup point. So all these levels are really, really interesting. There are, of course, some levels slightly lower here, maybe like 26 29,000, 29.69. Then you have the actual low down here, which of course, if the US shuts down, you know, we'll probably be trading down here. That will be a big slide of, actually it's not even big, it's 16, 20%, it's not big. But yeah, if the US shuts down, we'll be down here. If Europe shuts down, like Germany and France, I guess we'll be lingering around these levels as well. But if it is contained, then this is what we're looking at. There are other indicators again that are supporting a bullish view. Now, if you're short-term trader, you're looking to scalp, you're looking to just take advantage of the downtrend, or you want to wait for the short-term trend to align itself with the big picture, then you're looking at 31.85, that level up here. It might go up, and then it's probably going to come down a bit, like I would have said in regards to Germany. So that is the short-term outlook. And technically, this is the trend funding level. This is the level we want to be looking at. And if you want to wait for a trend of the end of the downtrend, it makes perfect sense as well. Now, if we take a look at other stuff, we have something like the dollar yen. So the dollar yen is closely linked to those markets as well. And it is short-term bullish by 109.58. However, this is a market that's giving us many false breakups in the past. And it wouldn't surprise me if the market, tumbles lower and tries to take out this level, and then we will be looking to buying it down here. But if you're really optimistic and you just want to know where the short-term trend is, well, it remains bullish above 109.58, but I wouldn't give this too much of a trust. This low here, I think we could probably go down and then probably go upwards. In the case we do see a massive shutdown of Europe or the US, then we'll probably be trading down here around 106 and maybe 105. As for the other markets, this is the euro. Now the euro is acting differently now than in the past, and as well the dollar. A dollar had a very good move. We started telling people to sell down here and here. We went all the way down to pretty much target of this last 10 shoulders pattern. Now the market is back up at the 50% correction level. It's still 951, so I think we're gonna linger around these levels, and technically this is a level we could go short. You just need to understand that since people got scared about the coronavirus, stock markets have been going down, and this thing has been going up more or less. Let me double check that. On the 20th, this started to go upwards, and the market peaked exactly here on the 20th. So there's a bit of an inverse correlation here. Because what's happening here, I think, with the euro is that it's acting like a funding currency. It's like the dollar yen. When things really go bad, people buy the yen. They don't sell the yen. And I think this is a little bit what's happening here. You might ask yourself, why would anyone, let me see what that, so why would anyone actually buy the euro, you say? It's because people take loans in euros. Like, so there's something called the 3-month LIBOR. The 3-month LIBOR is a negative 0.40, negative 40 basis points. This is the interest rates where banks borrow. So where is the US? There's a site, this one, global rates. So here you can see, so you have US LIBOR 1.64. Let's make it really big for you guys. So you got US LIBOR, and that is at 1.69. You got, let me see here. Yeah, this is the overnight LIBOR, which is a bit different, but it's a negative 54. So what happens here? Banks can borrow and lend at these levels. So what some people do is that they will borrow here. In fact, they get paid to borrow, and then they will invest this in other places. And that is what's happening. So what happens here is that when everybody gets scared, the money flows back into the euro. So people start to hedge their bets, especially if they're trying to make money by being long dollar LIBOR and being short Euro LIBOR, because there would be the difference here will be about 2% per year. So imagine you have that leveraged, and then you push this through. Well, when things start to go bad, the market will swing back up, and that's, I think, what's happening here, because it's not just here. You got your Euro CAD. You got your Euro CAD going up. Let's actually take a look at Euro Yen. That's an interesting one. Yeah, Euro Yen is even the yen is losing against the euro here. So you get an idea here of what's happening. I think Euro NCD. See what's happening here. Yeah, the New Zealand dollar. I mean, New Zealand dollar is weak against many different countries, but this is even more because the New Zealand economy is so closely linked to what's happening in China. So that is why this is going up. And you just need to remember that in back of your mind. If you think that the situation is going to worsen, then it's probably going to go a little bit higher. In the case of the pound is up a tiny bit today. Actually, let's call it unchanged because it's up with 11 pip. So a few days ago, we said people probably going to sell here, so we're bidding them a profit. But this is, if I get rid of all the fancy stuff, it's trading sideways. So it's definitely capped by 30.70, and it's also supported by 28.49. So it's trading sideways. An idea which is to be bearish here, but it is a sluggish thing, and if it can be avoided, then I would avoid it. Now, technically, again, the trend is bearish on 130.68. As for gold prices are in an uptrend. We know that, right? We said people probably going to buy here, lift it to the upside, which they did. It was holding one, really good. And then we said people are probably going to buy here, and the price did revisit the lows, and now the trend is bullish. I mean, it was always bullish, but where we'll be in the money here, and up with about $17 per contract. Looking at this today, the trend defining level continues to be this level down here, and hopefully at one point, what I'll be able to do is I'll take that trend defining level, and I'm just going to put it down here. But for now, I'm going to leave it open like this, and if the market does revisit the levels, I still think we're going to continue to carve out lows here. Something that is also interesting is the fact that gold prices are not really rallying despite stock markets declining the way they are. Okay, the only thing we didn't cover was crude. So this is crude, and crude, you know what to do, right? Because we talked about this one yesterday. So the trend was bullish about 49.21, but the market closed below that level yesterday. So this is a bearish trend. And I said we're stuck in a big rectangle support resistance, and on the break to this level, could potentially go down to the bearish pattern target at 37.29. So I'm sticking with that idea, and that is obviously the reason why the Canadian dollar is weakening and some other commodity markets as well. Now, the short-term trend will remain bearish, and I just put that level here at 50.81. So staying short below that level, I'm going to treat this as a successful breakout. And if we do swing to the upside, so if we do go back to 49.21, then this will continue to, I think we'll go up and go down. This is also linked, of course, to the coronavirus, but it's not as sensitive as to than stock markets are. The stock markets, you know, if you have someone saying something, they will go up, they will go down. The same thing with the currencies, but here it's more driven of actual producers and consumers of crude oil. So it's not as, well, I might be wrong, but I have a feeling at least that the what we call real money, so producers and consumers, have more of an impact on this market than you have on stocks, which is more speculative, and as for currencies, which is also much more speculative, which makes me think that given the current situation, because we're not seeing too much demand out of China just yet, then this could continue to be under a bit of pressure. So this can continue to go down even if stock markets are back at their highs. Okay, we have a few minutes to answer questions. Let's see if you have any. Okay, so we don't have any questions now. Let me see if we're even online. All right, so same thing like we did yesterday. No, we are live. Why is this a bit weird? I think I added the wrong video. I can see there were 10 people watching and not just here. Let me see what I did wrong. All right, so apparently I'm live here. Okay. All right, good. So sorry for the confusion there. I sent you to the home page on Investing Cube, and I'm live on a different link. At least I'm live. Yesterday I was talking to myself, and I had to do a recording for you. All right, so we have a few people in here. Good morning to you guys. And we have a few new faces. We have John. We have Abni Manu. We have Maurizio, of course, not a new face. Thank you so much for joining us this morning. I hope you guys are holding up well in Italy. And thank you so much for the updates as well on Twitter. We have Stefan asking, can we take a look at the dollar CAD? And we got True Invention. What do you think about the euro? Is it the right time for buying? And then the DAX. So we covered the DAX and we covered the euro. The only thing we didn't cover was the dollar CAD. So let's take a look at dollar CAD. So the dollar CAD, I have now turned short-term bullish. Let me explain to you why. So the market was capped. Imagine a trend line here. And yesterday you got a quite strong bullish move. And the short-term trend for now remains bullish about 32.45. And it might come down a bit and it can go upwards. The reason why I saw it can go upwards is just because of the bearish outlook in crude oil. Now, if someone said you need to choose, you need to trade crude or you need to trade the dollar CAD, then I would say trade crude oil instead of trading the Canadian dollar, because the dollar Canadian is influenced by other things, whereas crude oil is just a crude oil play. Okay, I think we're going to wrap things up, and I want to thank you so much for watching and also for your continued support. Don't forget to like the video here, and don't forget to share as well. That's really good if you could do that, to get more and more people joining us every morning. That way it shows to me that what I'm doing is right and I should continue to produce more content. So let's do that. As well, as you know, I'm available as well on WhatsApp. I do have a WhatsApp feed. Let me see if I can send you that link. What I do is I send you the video, and sometimes I send other stuff as well, like articles I've written. So you just need to click on that, and then I will be able to add you to my WhatsApp feed. Just make sure that you need to save my number on your phone as a contact, because if you don't, then I'll be sending you messages, but you won't be receiving them, because WhatsApp only works when the receiver has saved the number to avoid spam. Okay, guys, we're gonna wrap things up. Thank you so much for watching, and I'll see you guys tomorrow, same time here on the ATFX channel. Thank you, and bye-bye.